You're welcome back. Now let's look at the next requirement of this question, which is to prepare partner's capital account. Okay, and this is the partner's capital account in columnar form. So let's prepare it. In the statement of financial position, the capital account of each partner were given P 70,000, Q 60,000, R 50,000. So let's transfer all that. So on the credit of the capital account, we will have balance brought forward. For P will be 70,000, Q will be 60,000, and R will be 50,000. Okay, let's go back to the statement of financial position. Now we have a current account. Remember what current account is? It's used when an entity is maintaining a fixed capital account. So any increase or decrease in capital account will not go directly to the capital account, but they go to the current account. But now that the company is dissolving, so we have to close this current account and transfer it to the capital account. So there will be no more current account. So let's transfer this current account to the capital account. P was 9,700, Q was 7,500, and R was 16,200. The next is to transfer the profit on realization to the capital account. From the realization account, we determine the share of profit on realization to each of the partners. P got 14,610, Q got 9,740, and R got 4,870. So let's transfer them. Realization profit, P 14,610, Q 9,740, R 4,870. Okay. Now, other items or the remaining items we need to post in the partner's capital account is the asset that were taken over by the partners. From the realization account, we were told that each of the partners took over a particular car, while R, in addition to the car, also took over premises. So let's debit the partner's capital account. As we have credited the realization account, the corresponding debit is the partner's capital account. So we'll have car taken over. P, it took over a car worth 4,000. Q, 6,000. R, 3,000. Okay. Next is the premises taken over. And this was by R at an agreed value of 162,000. Alright. Okay, and that is it. So let's balance this account. The total on the credit side for P was 94,310, while on the debit was 4,000. So the deficit side is the debit with 90,310. Okay, and this represents the amount we will pay or settle P. So we'll have bank there. That means the corresponding credit will go to the bank account. You will see also transactions involving bank when we prepare the bank account. Okay, let's move forward. For Q, the total on the credit is 77,240 and on the debit is 6,000. So the deficit is on the debit of 71,240, which will represent the amount we are paying to Q as his final settlement. The total on the credit for R was 71,070, while on the debit is 165,000. So the deficit is on the credit and is 93,930. Okay, and that will represent the amount R will pay to us, because now R has an higher debit over credit. So he has taken over what he has in the partnership. So he needs to pay us 93,930. So we have prepared the partner's capital account and we have settled all the partners, and some partner will have to pay us like R. So this is how you prepare the partner's capital account on dissolution. In the next video, we will look at the bank account. So thank you very much. See you in the next video.